and welcome back to TechnoChart's YouTube channel. And in today's video, I am going to talk about consolidation phase breakout trading strategy and how you can trade profitably using this same strategy. So basically, what we are looking for, we are looking for a stock that is consolidating between an area of support and resistance after an prior up move. This is to be traded in a continuation pattern rather than a reversal pattern. So what is continuation and what is reversal? Once a trend is also already established in a particular stock, for example a higher high higher low structure is there, and you see that the stock is forming or moving upside, then we are looking for the trend to continue and for a breakout to happen on this side rather than a reversal to happen. For example, if a stock is forming a lower high lower low structure, and if the stock is consolidating like this, so here if the stock breaks out of this area also, then this is also known as breakout, right? But what we want is we want a structure where the structure of higher high and higher low is established, so that the probability of the success in this strategy is much higher. As I've already mentioned that we are looking for an established trend, here we see that the stock is already moving up, and then the stock has started to consolidate between the resistance area and the support area, right? So here the smaller the support area, the better the breakout will be after the breakout happens, because after volatility contraction there has to be a volatility expansion, right? As the stock is trading in tight range, then after the breakout will happen, the stock will start to move in a wider range, and that is known as breakout simply, right? So after the breakout is happening, we are entering into that particular script. So what to look into this particular setup? We are looking for stocks whenever the consolidation is happening in this period. The red candles should always have lesser volume compared to the green candles, right? So these candles are which are present in this chart. So here you see that we are looking for stocks where this red candles should have lesser volume or smaller volume bars compared to these green bars, so that we understand or we are confirmed that bigger players are not interested into exiting this stock, right? And breakout should always happen with higher volumes. Always remember, breakdown can happen with smaller volume, because if a stock wants to go down, it can go with smaller volumes, as it is going in the force of gravity, to explain you in a simple language, right? So for a stock to break out, there has to be enough power so that it moves swiftly above the resistance area and it overpowers the sellers. Okay, so now let us look at the chart of Delta Corp, which is a recent example. As we had seen, this is a similar example of the same chart that we had seen. Like the stock had a prior uptrend, then the stock is trading in a sideways zone, and then the breakout is happening. So here also we see that the stock is having a prior uptrend, the stock is consolidating in a bigger area, and then a breakout is happening. Right now we are looking at the weekly time frame, so to understand this in a small better way. So here we see that whenever a stock is falling, the can you identify how whenever the stock price is falling on the lower side, there is a lower volumes, right? So let me mark it in the chart. So here we see that whenever the stock is falling, right? So whenever a stock is falling, here we see that the red bars are always smaller than the green bars. So this means the bigger players are not interested or are not willing to exit this particular script during this consolidation. And as you can already see that the breakout is happening on the higher volumes, right? So this is the simple criteria of a breakout trading. Now if the breakout has already happened, one should not enter or chase after the stock has already broken out, because it will provide a high risk opportunity. So in this case, if the stock retests at around 310 area, that is around 20 rupees lower, then one can take an entry while keeping the stop loss at around 290 area. So this could be the ideal stop loss in this particular trade, and the entry should be at around 310 rupees. So similar structure is seen in a breakdown. So let us look at the chart of Apollo Tires. Here we see that the stock is consolidating between a resistance and a support area. Here we are taking the trade against the overall trend, right? So because the overall trend was an upside trend and we are taking a trade on the short trade, then that definitely reduces the probability of profit, because as we are trading against the trend. Right now we see that the breakdown had happened here at around 197 area. Although the stock did not have that much kind of significant volume, but still the breakdown had happened, and currently the stock is retesting the same area. So currently if you want to short this particular script, that is in futures or in options, you can short this particular script by keeping a stop loss at around 201 rupees or 200 rupees. So with a 10 rupees stop loss, you can keep a target of around 20 rupees or 30 rupees depending upon the risk to reward ratio. This is one second chart that you should be, for the same example. The third example that I would be giving you is of Radico Khaitan in the daily time frame, right? So here we see on the daily time frame that the stock is having a prior uptrend, stock is forming a consolidation area, and then the stock is again moving up. Similar structure you will see getting repeated over and over again. This pattern already also has failures, as we can see that after the consolidation here, the stock broke out, and even though after the breakout had happened on good volumes or above average volumes, the stock failed miserably and has started to fall. This is where your stop loss comes into picture and should definitely be there. So in this case, our ideal stop loss would have been at around this area below these three candles. So our stop loss would have got hit if we would have bought at around 1200 rupees or so. So stop loss should be there in the system or should be trailed accordingly using the moving averages or relative strength. Now relative strength can be used to identify the stocks that are in high that give high probability of profit, because if a stock is having high relative strength, then the stock has a higher chance of moving up. So in that case, we are looking for high relative strength stock. So if you want to know about relative strength and stage analysis, then we are having a mentorship program starting in April, which you can join. For that, the link is there in the description. You can directly join using that link. And if you like the content, do share it with your friends, and for more such tips, do subscribe and like the channel. Thank you.